Hello traders, today is the 3rd of November 2010 and happy trading to you all. We know that there are important news coming out today and also tomorrow and Friday. So this is very important. It does not matter which trading method you are using. You must check the news, know exactly the impact the news is likely to create on the market, and also what time the news is coming out. Very important. You cannot afford to disregard the news at all. Okay. Right now we have again the Australian dollar yen, which I'm looking at right now. Yesterday we know that there was a very important news, like I did one video earlier on. Now we want to talk about the Fibonacci retracement. Okay, so as we can see on this chart, there was a price pivot level here. Okay, the price went down nicely and then it displayed this low here, and from there it turned around. Okay, if you want to draw the Fibonacci lines, you can also watch previous video from my fellow traders. Excellent video on YouTube, plenty about Fibonacci retracement level. So right here we have this low here, and the price from there went up. Okay, so there was a trend from this point continuously up to here. You may decide to draw it from this point because this resistance line here is broken. You may decide to draw it from here all the way up here. It doesn't matter. Okay, in this video I will draw the Fibonacci line from this low point to catch. I'll clear the mess and then I'll start again. I will draw the Fibonacci line from the low here, okay, to catch the whole range. Okay, so from here up to this level here. Right now the price came and retested the 38% Fibonacci retracement level of the movement from here to this level here. Okay, so this is the 38% Fibonacci retracement level. As you can see here, the 38% Fibonacci retracement level of this Australia dollar yen, okay, currency pair. This is the hourly chart. Okay, is 8032. Okay, it touches here and then start turning around here. We'll see whether it will continue or not. My view is this currency pair, Australian dollar yen, people should be bullish towards it for now. Okay, and then we'll see when it comes to the high here of yesterday. We'll see what will happen, but from now I think people should be bullish. So you draw your Fibonacci line for yesterday move, which went a little bit to the day before. Okay, so instead of drawing from yesterday exactly, we start from here. Okay, doesn't matter. So we want to see the reaction of the bull that way in this trend, which means the market was bullish. If the bullish momentum remain intact, repeat, if the bullish momentum that has started from this level here all the way to this level here remains intact, the bulls are likely to come back and take control of the price. Okay, so this is why we use the Fibonacci tool for. It does not mean that the price will definitely turn around, but we observe the price at those levels. That's all, levels of observation. So the price coming there, you observe it because you see this is the market. This is what has happened in the past. It's likely to happen again. You keep your eyes wide open. You do not blink. Okay. All right. So now it's at 38%, which some people quickly bought it here. Some traders, some aggressive traders, will place order there to buy and quickly play their stop loss below the 61.8 Fibonacci retracement level. I do not trade in that. I do not trade like that. I will be patient and watch the price. Okay, in this zone here. What you can do is to draw your trend line here. Okay, you see it's not a clear cut trend line. Here it's not a clear cut trend line. This one. Okay. So the best thing to do is to watch a previous price level. So in order to achieve that, you need to draw horizontal lines, okay, to go into the past to analyze the psychology of the market at those price level. That's what we're going to do quickly here. So the 38% here, we draw it line. I'll call out that with red, okay. So the first line is red, that's the 38%. I'll go to the 50%, okay. Now I'm going to call out that 50% blue here, okay. Go back again into the color, the 50% Fibonacci retracement level. I color that blue. Now I'm going to the 61.8. Okay, my favorite one is the 66%, which is right below the 61.8. But to satisfy other trader. I'll put the 61.8 there for you, okay? And I will color that 61.8. I will color that yellow, my favorite color right there. And then I will go to the 78%. I will leave the 66% because a lot of people do not use that. So I leave it there for myself, 66% there. Then I will draw the 78%. It's also a bit popular. And I'll color that black, okay? Right now. The black line is where is the cheapest this can get, okay? If it cross below that, it's 78. The next level is 88%. But I doubt that that price will come there. The best scenario for me, my best place to buy is around the 66%. That would be perfect place to buy. Now we want to see what the price did at the red line, which is the 38% Fibonacci retracement level. Follow me, the red line. So we go into the past now to see what has happened on the red line. So keep watching the price at the level of the red line. Watch the red line only. Disregard other line. Red line only. Okay. So in the past, on this 60-minute chart, the price came and touched it and went down. Okay, come back. You went above it, fell and come down. Okay, that's where we are now. The price is finding support there now. So it's an important level also on this hourly chart. So we go back now. So we know what has happened there. So this can be looking at the price itself, the number one indicator, in combination with the Fibonacci retracement. That's how you do it. Okay, the price, the number one indicator, together with the Fibonacci retracement level. Do not forget the timing of the entry point. Okay, that's the most important thing. Now, talking about the timing, we are talking about the TSTW SYS08, the unfair advantage trading system. Right now, the price touched the 38%. Now we're going to observe the blue line, okay, to see what the price has done in the past there. Okay, we keep watching if we can rely on that level. You see the price also touch. Watch only the blue line, please. Okay, so right there, the price came, failed to the. It didn't support the price here. You see, it's the blue line is not a very good support. It came, fell, went up, come back, fell again, went below, now went up, fell again on the blue line. That's the history there, okay? And we go again a bit further on this hourly chart. It came, touch it, went down, touch it, went down, okay? That's what for the blue line, we keep watching only the blue line, okay? Right here, there was something very interesting. It went below it and come back. So one time at least there was a support on the blue line, okay? So moving forward, this is about the 50% Fibonacci retracement level using the retracement together with the price, the number indicator. My favorite 61.8 Fibonacci retracement level, the yellow line. We're going to go into the past to analyze the psychology on the market, what has happened there in the past, and in order to make decision. Okay, the yellow line only we are watching now. We see the price has touched the yellow line, found a support there, right there. Touch it, nice one, went up. Okay, so that's excellent. Okay. So here we keep watching. Here it touched it, went down, touched it, went down. But when it went above it, it found a support. Now it went above it, now it fell, come down. Okay, it went above it, fell, come down. It did it now. Here it finally found a support. Okay, that's about the yellow line, the 61.8 Fibonacci retracement level. Okay, so right there it found a nice support again. So twice at least we have excellent support at the 61.8 Fibonacci retracement level. You see it nicely, the wick here. Phew, nice one. Okay, the 66% Fibonacci retracement level is just below the 61.8, so it's somewhere below this one here. So we will go back and look at 66. So just remember that the 66% is just below the yellow line. So if you are buying below the yellow line, it's not to buy. Okay, so you see that's about the 61.8 using the Fibonacci retracement together with the price itself, the number one indicator, instead of having your own decision saying that it will definitely turn around, it will definitely come down, and you sell. If you sell for no reason, okay, because you think that it's going to fall, it's like gambling. Okay, we do not trade that way. We wait for confirmation and the timing to be confirmed before you enter the trade. Because people see the price going up, stochastic overbought, they say it must come down now, I'm selling. Okay, that's not the best way to do it. Okay, if you do it that way, it's not right. Okay, so now we watch the black line, which is 78% Fibonacci assessment. That's the cheapest it can get. I don't think it will get to that place. Maybe on Monday we'll see. If it come to retest the high of yesterday and fell, then the next level will be 78, directly 78. That will be a double top, and then if it fail right there, it will going to go to 78. You will struggle because for a bullish day like this and then fail to cross above the high, that's terrible. Myself, I would definitely be there to sell. Okay, Okay, so we're watching now the black line, the fine for support there. Okay, that's what we have yesterday. The black line, the 70, this level here, it went up bullishly. Okay, so it was a strong support, the black line yesterday. Okay, pure. So we watching it. The here it touched it and went down below. Touch it here, went down below. We keep watching the black line only. We're not watching any other line. The black line. Now it came test it, fell here. You see, using the price itself as the trend line. Even if you do not know about the Fibonacci interest rate level, you're using only the price support and resistance line. You should be alright because all these levels has been drawn by the price itself after people use all sorts of tools, Fibonacci, MACD, stochastic, so it's all in the price. So the price cannot hide anything. That's why we say the stable data that we have found that the price does not hide anything. Even if somebody is doing something or manipulating the market, whatever they are doing, it's right there in front of you. At one point, it will show up. So that's why I don't believe in market manipulation. So if they are doing it even, we will profit from it because we'll know exactly what's going on. So we are watching the black line, okay? Here it touch it, here it touch it, okay? A bit excited this morning though because I'm a bit early today. So you see, okay, here it came, touched the 78 right there, almost, and then went boom, bye bye. You see, same thing we had yesterday. So we can say that this level of 78% is excellent support level, and if that currency managed to get there, which the smart money will prefer because they always like to buy at a very reliable support level. Okay, so they will be very desperate for the price to come back to that level after everybody knows that the interest rate has gone up. So this is how we will use the Fibonacci retracement together with the price itself, the number one indicator. I hope you learned something from this video, that you will start creating the market consistently like us, okay, and using the Fibonacci retracement level like a pro at all time. Until the next time, enjoy yourself and be very happy. Speak to you soon. Thank you.